Good morning, everyone, and welcome to annual open enrollment for 2022. This is all you need to know, so hold on to your seats, get ready, and let's go. Open enrollment starts today. Today is October 26th, and open enrollment will be available through November 15th, okay? All employees must enroll this year. The last few years, we've been doing a passive enrollment, meaning if you didn't want to make any changes for those benefits that don't reset, you could just roll it over, didn't have to do anything, didn't have to log in. We always encourage you log in every year to make sure your information is correct, but those past years you haven't had to, it wasn't required. This year it is required, and that is because we will be using a new method of open enrollment. We'll be using employee self-service, ESS, which you all should be familiar with. That is the same system or online access that you go to when you're looking for your pay stub, your W-2s, or you're looking to see how much time you have in your bank. So this is a system that you all should be very familiar with, but in case you are not, we will talk a little bit at the end about how to log on to employee self-service, also known as ESS. During the open enrollment period, this is your opportunity to make those changes that you have, whether it's adding or removing dependents or changing plans. This is the time where no questions are asked. You make those changes you need to make, and they are effective for January 1st of 2022. Enrollment is going to take place again in employee self-service, and that's the link on the screen, and which you can also find on Miramar Pulse, but that is the direct link right there on the screen. We've also added a QR code, so if you've got your phones up and you want to scan that so that you're able to access ESS on your phone, feel free to do that as well. And just reminding everyone that during open enrollment, this is every year, all flexible spending accounts and the health savings account reset to zero annually and must be reelected. So you have to make an active election for a flexible spending account, and that is always the same every single year. And remember, benefits elected that you elect during this open enrollment period will be in place for the full 2022 plan year unless you experience a qualifying life event. Those qualifying life events include marriage, divorce, birth or adoption of a child, death, or loss or gain of other insurance coverage, okay? Now let's talk about what's changing for 2022. So we have a new enrollment process. You've heard me mention it already, and I'm probably going to say it about 100 more times to make sure everyone is aware. You are to use the employee self-service module for open enrollment. BenTech is still available. It is not available for open enrollment, but it is available for you to view your current benefits if you'd like to, but that system will sunset on December 31st of this year, okay? ESS will be your new home for all things benefits. We have a new vision carrier. So we had an RFP process, and Humana was ranked the #1 and responsible proposer. They were ranked highest, and their contract award was approved by commission. So Humana is our new vision carrier. They match the plans, and Mike Gillen will go into that a little bit more, and they're also offering a buy-up option. So Mike will talk about that soon. Standard life insurance, they increased the voluntary life guarantee issue. We're having what's called a true open enrollment. So this is really important, especially considering what's happening today. They are offering an opportunity for those of you who have less than $200,000, or maybe you haven't bought up to the additional life insurance at all. You can buy up to $200,000 with no medical underwriting. Okay? If you have more than $200,000 and you wish to increase beyond that, you would have to do medical underwriting. And Mike will talk about that a little bit more. And the voluntary life guarantee issue was also raised for spouses up to $50,000. So whenever you see that there's no medical questions asked, there's guarantee issue increases, it is an opportunity to take advantage of that. And Mike will talk about why that's so important. We have a new voluntary benefits carrier. So the carrier that is replacing Aflac is Standard. Standard is our life insurance and long-term disability carrier now. They've been our life insurance and long-term disability carrier for several years. We're very familiar with Standard, and they will be taking over the voluntary benefits, and Mike will talk about that a little bit more. But make note of that, Standard is replacing Aflac. Let's talk about what's not changing. So we've got the same plans, costs, and carriers for medical. So the Aetna plans aren't changing. The costs that you see, your deductions, your payroll deduction costs have not changed. The city did absorb the slight increase that we did have and did not pass on any of those costs to the employees. Delta Dental is still our dental carrier with enhanced benefits, so Mike will talk about that. Flexible spending accounts through MiramarFL will continue. Health savings account through PayFlex will continue. We still have our wonderful employee assistance program through Etna Resources for Living. We still have our phenomenal wellness program through Vitality. Our employee on-site health and wellness center, it's now been a year since we've opened the on-site health and wellness center, and it's going strong, and we encourage everyone to visit there. And we still have our legal assistance program through Preferred Legal. We also want to note what's not changing is our opt-out credit process. So those of you who opt out and have other group coverage and apply for the opt-out credit that's available, just remember that the medical waiver form and proof of other coverage confirming the effective date and who's enrolled is due by November 29, 2021. Same process we've had every year. So here's just a look at our vendor partners that we're going to be talking about today. And Alex, so some of you are familiar with our Alex tool, which is our decision support tool. So those of you who are like, who is Alex? Is that Alex a person? So Alex is a virtual consultant in a way. And Alex explains your benefit options and helps you choose what's best for you. And so we have the link here. I encourage everyone to go through and take a look. Alex speaks in very plain, everyday language, none of that insurance mumbo jumbo and all the acronyms that we tend to use for those of us who are in benefits and insurance, and it can be very confusing. Alex talks about each of the plans and does a calculation based on the way that you answer the questions that Alex asks about your personal situation, and then calculates what plan would be the best for you, taking into consideration the premium that you pay based on your bargaining unit. And so this information that you put in, we do want you to know that it's completely anonymous. No, it's not saved anywhere. It does not go back to human resources or to the city at all. This is strictly for you to get some help to determine what plan is the best for you. Okay? Here's another screen just showing about some more questions that Alex asks about how often you visit the doctor or specialist, and it's because it's calculating what your out-of-pocket costs are, plus the premiums involved in the plans, and choosing the plan that would be least expensive for you based on how you answer the questions. So I think it's a phenomenal way, a phenomenal tool to take a look and understand what's best for you. And even if you don't agree with Alex, it's okay. And you can choose whatever plan you wish, but it is there to help you look at it from a financial perspective, okay? All right. Hold on, having some technical issues. Hold on one second, guys. All right. All right, so I'm done with my intro, and now I'm going to turn it over to Mike Gellin, benefits consultant for the City of Miramar. He's going to talk a little bit more about all of the different plan options so you have a sound and comfortable understanding of what we've got going for you and what's included in your benefits package. All right, take it away, Mike.
All right. Thank you. Good morning, everyone. Naima, is it possible for you to maximize the screen?
Sure, let me
I'm
see.
having a
Nope.
little bit of a hard time hearing. But again, my name is Mike Gillen. Work with Naima with the Gillen Benefits Group all year long, along with her benefits team, to make sure we offer you guys the most comprehensive and affordable benefits possible. A lot of work goes into putting those enrollment guides together, getting the Alex tool together, and doing all we can to make sure that you can fully understand the benefits that are offered. And then we also work really hard to negotiate with the carriers to try to make sure there are additional value-added benefits that you can take advantage of, and then trying to minimize the cost to you while increasing benefits. So, for example, getting the standard to raise the guaranteed issue from $50,000 to $200,000 for anyone that desires to buy additional life insurance. That was a big feat for us. But right now, we're just going to talk about the medical insurance. And as Naima stated earlier, there's really not much changing here. You still have the same three plans that are offered before. Your Aetna HMO plan, where the majority of the employees are. Then we have our Aetna POS plan, which is your in and out of network plan, works just like a PPO. And that's where maybe 10% of the population is. And then another 10% are in the Aetna high deductible health plan option. Now, the only change you see here highlighted in red is the out-of-pocket maximum. There was a flaw in the prior POS plan where the out-of-pocket maximum was low for the out-of-network benefit. And normally the out-of-pocket maximum is typically twice whatever the in-network deductible is. And so we had to fix that. So that was done on the POS plan. That's really not going to affect a lot of people because about 96 or 97% of the people use in-network services. So that's just a flaw that we needed to fix. And then also for anyone that's on the POS plan or the high deductible health plan, you pay the co-insurance amount until you meet the out-of-pocket maximum. So once you meet the out-of-pocket maximum, the term means exactly what it says. Once you spend the maximum amount stated, everything else is covered at 100%. So for the HDHP plan, that will be $2,800 as an individual, $5,600 as a family. In network for the POS plan, $3,850 as an individual, $7,700 as a family, and the same thing for the HMO plan. If you had major medical services and you kept going to the doctor, paying all these fees, once you pay the out-of-pocket maximum, then that's it. Nothing else comes out of your pocket. Everything else is covered 100% by the insurance company. So next slide. And then these are just some other services that are offered. You have your hospital services, emergency room services, urgent care services, where we encourage everyone to use urgent care where applicable rather than the emergency room. For your HMO, you're going to pay $250 flat if you go to the hospital and get admitted. If you're on the POS plan, you pay a $250 deductible or $500 deductible, and then a $250 copayment. And if you are on the HDHP plan, you have to meet your deductible, which is $1,400. And by the way, the City of Miramar funds your health savings account and the full amount of $1,400. And then you pay 10% after you meet the deductible. So if you don't meet the deductible, then you just pay the amount that is covered under your deductible. And that deductible is fully funded every single year at $1,400 if you're an individual and $2,800 as a family member. Next slide. And then your pharmacy drugs, your medicines. If you are taking generic drugs, it's covered at a very low cost at $10 for the HMO and the POS plan. If you're taking a second tier drug, it's going to be $30 on both plans. And then if you take a drug that is covered by Etna but not on their preferred list, you'll pay $60. And then there are some folks, very few, that take specialty drugs, which are what they call cocktail drugs, or they call them high technology drugs. You'd pay 25% of the cost to your maximum out of pocket of $2,500 per individual or $5,000 per family. That really doesn't impact many people if you're taking generic formulary or non-formulary drugs, but for people that are taking specialty drugs where you're paying 25% of the total cost, then that will impact you more. For the high deductible health plan, the co-payments are the same, but you have to meet the deductible first before you pay that copay amount. And the deductible again is $1,400 and $2,800 for a family, and those amounts are fully funded by the City of Miramar. So if you're in the HSA plan, the high deductible health plan, every year Miramar is giving you money to put in that account to cover the cost of your insurance. So it's a plan that we weren't sure we were going to offer because we weren't sure if people were going to take it, but a lot of people have been taking it and taking advantage of it, including Naima, and she can tell you her and her family has done well financially because they're managing their health and managing those dollars under the Aetna HDHP plan. So part of the reason why we have this open enrollment, a true open enrollment, is to allow you guys to really consider some of the plan options and see if you want to make a change. Do you want to add anything, Naima? Can't hear you.
I was talking on mute. Yeah, so I joined the high deductible health plan as soon as we came out with it. Has it been 3 years now? I think so. And so one of the first things that I did before joining the plan was I took a look at my costs. I took a look at how often I go to the doctor, how often my family goes to the doctor, the prescriptions that we pick up. And the way that I figured out like what those costs would then end up being on the high deductible health plan was by accessing Aetna.com and viewing all of my explanation of benefits, which are essentially the claims that the doctor or the providers file on your behalf after they accept your copay. They actually then send in a claim for the rest of the payment because your copay does not cover 100% of their fee, right? And so I went to Aetna.com and I clicked on claims and spending. And then I didn't show it here because it's HIPAA, it's my personal claims, but a list of all your claims come up for you and your family members, and it shows you what the provider billed, right, what Aetna paid, and what you're responsible for. And it also shows you the discount that is afforded to you by having the Aetna insurance, because doctors typically charge a higher fee if for those who do not have coverage, and they charge a lower fee based on the rates that they negotiated with the provider, with Aetna. Okay, so that's how I figured out, well, wow, what is it going to cost me since I'll have to meet my deductible first? And that's how you can figure that out based on your historical claims, right? So you can do a projection of what you think you'll have for the future, but history always gives you such a good print on what's happening or what will happen in the future. So another thing that I did was I thought about, well, what services do I think that I'm going to need in the future? And what if I had like something like a higher cost service that I needed, like an MRI? And the way that you can estimate your costs, you can do that right on Aetna.com. And you click, once you log in, you click on Find Care and Pricing. You type in the search criteria, and you can search by your provider name, a specialty, a specific procedure, or a medication. And this is also how I looked up medications to see what it would cost with having a deductible, like what would that full cost be. And so I did that. And then you click on estimate your cost once you put in, and I put in an imaging center because I said, let me look up like what an MRI would be. My son is in sports and my daughter is cheers, and so she's always flipping and tumbling around. So I said, let me see if I had to get an MRI or something, like what would that cost me? So I clicked on there. And then it showed me for an MRI of the arm, you can pick all types of MRIs. And of course, if you were truly needing an MRI, your doctor would tell you what type you would need. And it told me it would cost me $382. And so some of you might be like, oh my God, that's crazy, right? But because the city fully funds the deductible into the health savings account, it wouldn't be something that I would have to worry about because the money is there in the health savings account for me. and I can use that to pay for the health services. So over the years, I've been able to accumulate money, and it came in handy because I had to pay for my son's braces, and I did not have to touch any of my money. I used the health savings account contribution by the city. So thank you, City of Miramar. My son's teeth look amazing.
All right. So, and remember, the out-of-pocket maximum is the most you'll pay. And because the city contributes so much in the health savings account, you would actually save money compared to the POS plan and the HMO plan. So now we'll talk about some of the value-added benefits that are offered through Aetna. And Teledoc is something that we've been trying for years to get members to use and enroll, where you can just talk to a doctor um, or nurse, but mostly doctors, about any situation you have, and they can actually provide you with a prescription over the phone, or they will tell you, you know what, you have something that sounds really bad, go to the urgent care, or take this over-the-counter medicine and go make an appointment with your primary doctor for the following week. But what we've seen in the pandemic is a significant increase in the number of people registering and utilizing this service. It's a great service. It's convenient. It's very secure, HIPAA compliant. So any exchange you have with a doctor is completely secure. And if you don't feel like leaving your house, or you're at work and you're busy, you can actually talk to a doctor live, get your situation analyzed, and get some great medical advice right in the palm of your own phone, and with all the security and privacy you would expect in a regular hospital facility. Then also with the Etna app, you don't have to call HR anymore and say, hey, I lost my ID card. Can you order me a new ID card? Your ID card is on your phone. What Naima just showed you, those steps that she took to analyze costs, all those things are on your phone. And most times when you see a doctor and they say, okay, I'm going to need you to take these tests or do these or that services, you can go to that website and search for the cost of those services. So everything is now in the palm of your own hand with the Etna app. So I encourage you all to download the Etna app, get familiar with it, and utilize it for your convenience. And of course, we have the on-site health and wellness center. So the city of Miramar is one of maybe 5 out of 31 cities in Broward County. Coral Springs just got one, Plantation has one, Fort Lauderdale has one, and now Miramar. So I think 4 cities. So again, we want Miramar employees to be as healthy as possible. A healthy employee is a happy employee and a more productive employee. And it's going to save Miramar a little bit more money if you're not too sick. So you can go see a doctor at no cost unless you're in the high deductible health plan. The only reason why we're charging is because the law says we have to charge. And it says we have to charge a reasonable amount. So we're only charging $10, which is very minimal. But you can go during on-the-job hours without losing time, without losing money. And if your boss is giving you an issue, talk to HR and they'll get that resolved. But the goal is to make sure you have access to healthcare at a convenient time for you, even if that means work hours. The Health and Wellness Center is also available to your family members. So we really want to make sure you get the personalized care you need. So instead of going to your regular doctor, and you can still maintain your regular doctor, but some people have that experience where they get rushed out, they don't get one-on-one time. The doctor doesn't really take the time to get to know them or get to know what's really bothering them, whether it's medical or mental. We have an on-site clinic where you have a dedicated doctor. You don't wait in line. You can download the app and make an appointment, but it's really meant to provide you with all the health services you need. And this is a very proactive doctor that's going to really find ways to help you improve your lifestyle in every way possible. So it's a great clinic or wellness center. It's a beautiful place if you haven't visited, and we encourage you all to take advantage of it. And just to summarize, all that's going on with the health insurance, there are no changes. And even though the rates have increased, the city absorbed that increase, so you don't pay more out of pocket. Um, uh, and the rates you will find in your enrollment guide, but the rates are the same as they were last year. The city, every year we evaluate whether or not we should continue to put money in the health savings account, and every year so far, the answer has been yes. So every year, and there are a lot of employees you can ask around who are taking advantage of it, at least 120, and the money goes in every year. You manage your health care, take advantage of the on-site health clinic, take advantage of Vitality, where you can earn points and earn rewards and get even more money. And so you maximize your money and improve your health. And of course, the on-site health clinic, it's convenient to most employees, whether you're at City Hall or a little while away. We all know where that Dunkin' Donuts is. You can go there, make an appointment, and get the true health care that you really need. And now we'll talk about dental insurance, where most of the plans did remain the same. However, we went through an RFP process and we were able to get some value added benefits. So some of you are in the PPO plan, no change to the PPO plan, same deductibles, preventive services are covered at 100%, whether you're in network or out of network. And then you have your percentage of coverage, whether you're getting basic services, major services, or braces. If you're getting braces, it's a $1,000 lifetime maximum. And again, so Naima took advantage of this benefit for her child, where 50% of the cost was covered by Delta Dental, and then she used her health savings account dollars, which some people associate with only medical services, but you can use your health savings account dollars to cover dental services, vision services, and other healthcare related services. And she was able to buy braces. So you have both in-network and out-of-network benefits with the PPO. And what else we're doing also in terms of value add is we will have on-site cleanings up to maybe 6 times a year. We're still negotiating with Delta Dental, where you can now get your cleanings at the on-site clinic or somewhere on-site at the City of Miramar. So again, we're trying to make things as convenient as possible so you can save your sick days, stay at work, and still get good health care and dental care. And then, we're all using our phones now. We're all mobile now. And so Delta Dental has an app now, which is similar to Teledoc, where if you have some issues with your teeth and if you're comfortable, you can take a picture, upload it, and have a dentist talk to you about some issues that you may be having. So again, it's a secure service, and it's designed so that you can have the convenience of getting dental services or dental advice from your own home or from your office. And then we also have the dental HMO plan. We have a significant number of people in dental HMO. So as you saw with the PPO, you're covered at 100%, 80%, or 50% for several services. So you really don't know how much you're going to pay because you just got to wait until the doctor tells you. With the HMO plan, it's a fixed fee service plan. So you know exactly how much you're going to pay for whatever service you're going to need. So usually when I'm enrolled in a plan, I always take the HMO because I've already had braces, I've already had major services done. And so all I need now is a cleaning twice a year. So for me, I like the HMO. I like to know how much I'm paying. For some people, they like the PPO. They like the flexibility of going out of network. And a lot of dentists, for some reason, well, they don't want to be in the HMO because they get paid less on the HMO. But it's a good benefit for anyone who wants to know how much you're going to pay for different services. Next slide. And then now we have Humana for new vision carrier. So we had Humana for medical. They did a great job for us. Now we have them for vision. And what we decided to do was give you guys more flexibility and provide two plan options. So just like our prior carriers, there's a large network. You can go in and out of networks, and you're covered for your eye exams, frames, and lenses, and of course, contact lenses for those of you who need contact lenses. And what we did is we said, hey, Humana, give us the same matching benefit that we have now. So we're doing that, and that's the low plan. So that's the plan that we had before. We have our $110 allowance, and the costs are actually lower than they were with the last plan that we had. And what the allowance says is you can buy frames or get contact lenses up to $110. Anything above that, you will pay the difference. And so we also have some folks who like to have designer frames, like to have Gucci frames or whatever your favorite brand is. And so you can pay a little bit more out of your paycheck. And now you have an allowance of up to $200. And so you can buy frames for up to $200 at no cost. Anything above that, you pay the difference. And then also there's no copayment for your eye exam under the high plan versus the lower plan, you pay a $10 copay. And, we probably could have come up with some different terminology besides low and high. The low plan is the same level of benefits you had before. And so now we're offering just a richer plan option. So if you don't need, better frames, then you don't have to have it. And also a different benefit with the high plan is you can get eye exams and frames or contact lenses every single year. versus with the lower plan, you have to wait 24 months to get a new set of frames. So some people are fine with that. Some people want frames every year. So we just wanted to provide you with an additional option, and you can choose, what plan option meets your needs and meets your budget. Flexible spending account. So for those of us who like to plan, we offer 3 types of dependent care or flexible spending care accounts. There's a health care spending account where you can set aside up to $2,750 to prepay for medical expenses or dental care expenses that you know for sure you're going to have. We always advise people to be conservative with how much you set aside. There is a tax benefit for setting aside money to pay for healthcare services, but there's also a use it or lose it provision. So if you don't spend that money within the grace period that you see on the screen, then you end up losing the money. Now, we also have a limited purpose flexible spending account for the people enrolled in the high deductible health plan with a health savings account. So if I know for sure I'm going to spend my money on healthcare services, or I want to limit the amount I spend, then I have a limited purpose FSA, which can be used for dental and vision services only, and not healthcare services. So if I know I'm going to get braces for myself or for my child, or I'm going to get really expensive glasses, then I could set aside money in a limited purpose FSA, which is limited for dental and vision only for the people who are taking the high deductible health plan. If you're taking the HMO or the POS plan, you can get the regular healthcare FSA to cover medical, dental, and vision expenses. And then there's also the dependent care flexible spending account plan, where if you know for sure your child is going to be in aftercare or daycare, and you know for sure you're going to spend more than $5,000 a year, you can set aside up to $5,000 pre-tax to pay for those expenses and reduce your taxable income. Again, there is a grace period, so we want you to be very conservative with how you spend your money or set aside money. I know for me, I had money set aside in a dependent care flexible spending account, and with COVID, I wasn't able to use it because there was nothing to do with it, and so that did cause a dilemma, but that should not be a problem going forward. Now we have the healthcare savings account, or the HSA, and this is only for people who are enrolled in the IRS qualified high deductible health plan. And so the IRS allows you to save pre-tax up to $3,650 as an individual or $7,300 as a family. The bank partner for Etna is PayFlex. Now, Miramar is already giving you a head start. They're giving you $1,400 and $2,800 if you're a family member. So if you cover a spouse, any number of children, and a family, you get $2,800 in your health savings account. And then you can make additional payroll deductions. So you reduce your taxable income. And if you become retired and you own a health savings account, this also becomes a retirement account. If you're over the age of 55, you can save an additional $1,000. So your maximum is not $3,650, it's $4,650 or $8,300. So if you're, in your 50s or you're getting towards age 55 and above, this is a plan that you really want to consider, because your out-of-pocket maximum is the lowest on this plan. So you limit the amount you pay out of pocket. Miramar offsets any potential losses you may have by funding you the first $1,400 or $2,800. And if you're having a good year and a healthy year, any amount that you keep gets rolled over year, and you can grow that savings account every year. So it's a really great benefit. And a lot of cities offer an IRS qualified health savings account, and they don't put any funds in there. Miramar is the only city that fully funds the health savings account up to the deductible. And this is just a math calculation to make it easier for you guys to see that you can, with Miramar funding the first $1,400 or $2,800 of your health savings account, your maximum contribution is at the end. You divide that by 26 pay periods, and you can put that money in every payroll cycle, or you can just choose to put the money in anytime you want. So you can decide to put the money in at the end of the year or once a quarter, and you still get a tax benefit. So this is a really great benefit for you guys if you want to take better control of your health and be more proactive with your health, and take advantage of the money that Miramar is giving you, and then reduce your taxable income by contributing more to the health savings account. And if you're somebody that's forward thinking and thinking about your future in retirement, this is also going to serve as a supplemental retirement account if you have additional funds left over once you retire and each and every year, because the money rolls over each and every year.
I wanted to mention that for those who want to do contributions, in the employee HSA, you have that opportunity to do so. I wanted to just let you know you're not locked in for the year. Unlike the flexible spending account, you are locked in with whatever election you make, you're locked in for the year. The health savings account does not have that same regulation. The health savings account, you can opt in to put in money, and then later in the year you may decide I have enough in there, or I need my money for something else, so I'm not going to put any more, and pause your contributions or cancel them altogether. So you get to control like how often and when you're making those contributions into your health savings account.
Absolutely. And because we offer the on-site clinic as well, you don't have to use the Aetna health plan for services, where you can get a significant number of services or great medical advice from a doctor at the on-site clinic. And these are just some of the advantages of the health savings account. The only account that has tax-free withdrawals. There is an investment option. So once you reach a certain dollar threshold in the account, you can start investing some of those monies, and your earnings are tax-free. As I stated earlier, the money rolls over year. I'm sure Naeem is not going to brag about how much money she has in her account now, but the money rolls over year. And if for some reason you decided, hey, I don't want to work at Miramar anymore, guess what? That money does not belong to the city of Miramar. The money is yours. It's portable. You take that account with you. And if your next employer has an HSA account, you can roll it over into that. Or most banks do have health savings account. I know Bank of America does. You can roll it over into that, or you can just keep the account with PayFlex. So it's very convenient. It's very user friendly. And again, we've done some benchmarking. A lot of other cities do offer high deductible health plans, and they put no money into it or very little money. No other city puts as much money as the city of Miramar. So you really have a head start when it comes to saving in the HSA. And now we're going to talk about other city paid benefits. So the benefits that we had before, the Miramar pays the majority costs of the medical and dental insurance, but these costs are fully paid for by the city of Miramar. So we have Vitality, which is a wellness program. We're encouraging all employees and your children and spouses and other dependents to register with Vitality, take some online education courses. When you get your annual physical, upload your physical results, and all they ask for are basic information like your blood pressure, your cholesterol, and then they give you advice on how to be healthier, and then you get rewarded with dollars. If you connect your phone or your watch or some other device, you get points for taking 2,500, 5,000, 10,000 steps a day. You get rewarded for shopping for healthy foods, and you get rewarded with actual dollars in the form of gift cards from Amazon, Nike, Under Armour. You can get Apple cards for music. You can get a hotel for a future vacation stay, or redeem some spa wellness benefits. So again, as you can see, Miramar is doing all that we can to make sure we offer you every option to live as healthy as you can. And this marketplace is designed for you to shop and get great benefits, and also take advantage of different wellness webinars and educational seminars to make sure that you are living your healthiest life and your best life. And so we're doing all we can to make sure Miramar is the employer of choice when it comes to health and wellness benefits. And now we'll talk about the basic life and disability benefits and also voluntary benefits. This has been a very difficult year because of COVID. A lot of people, including myself, have experienced loss in the family because of COVID. And that's when we really understand the benefits of having life insurance. We should probably call it death insurance, because other people will benefit when you pass away. But regardless of what your classification is, as an employee with the city of Miramar, there is a death benefit. So you want to make sure you assign a trusted person as your beneficiary, who will take care of funeral expenses, who will take care of the mortgage, the car, the rent, your children's education. So we offer basic life insurance and accidental death and disability and dismemberment insurance. So as you all know, we all see car accidents and shootings and fire. So sometimes you don't die, but you lose a limb or a body part. And in that case, that's where the accidental death and dismemberment insurance comes in, where you will get funds for certain losses of fingers or toes or body parts. We won't talk about that, but you have some good life insurance and disability insurance. Now, we also offer, we fought hard with the standard to offer up to $200,000 of voluntary life insurance. So Miramar on the previous slide will provide you with a basic benefit of one-time annual salary or $100,000 flat benefit if you're a police officer. And if that's not enough, and for most people it is not enough, because if you die today or tomorrow, if you take your annual salary, that's going to be lost from your family. You take your annual salary, you multiply it by how many years it's going to take for your child to turn 18. Or you take the percentage that you're paying with your spouse or your partner for rent or for mortgage for the car, all that money's lost. So you really need to buy more than your annual salary. Most financial planners say you need to buy 3, 4, or 5 times more. So we fought with the standard to say, hey, $50,000 death benefit for voluntary life insurance without medical questions is not enough. Can you raise that? So they raised that to $200,000. So now you can buy up to $200,000 of additional life insurance above and beyond what Miramar is paying for, with no medical questions asked. So they won't rate you. They won't ask you to fill out any forms or talk about your medical history. Now you can buy with $200,000 for yourself and up to $50,000 for your spouse with no questions asked. If you want to buy more, up to $500,000, then they will ask questions. So we're encouraging all employees, especially we know the value of life insurance now. We see on TV all the time, people pass away. It's a big surprise. They set up a GoFundMe. And most GoFundMes never reach the goal. So people end up getting their money back, and the people who are trying to raise money never get anything. So buy as much life insurance as you can. It's much cheaper buying it through your employer than going to State Farm or Allstate or anywhere else. You can also buy life insurance for your child. A lot of people don't think about that, but unfortunately, sometimes a child passes away, and you want to have some expenses to pay for the funeral, so you can buy up to $10,000. It's not more than that because we're not trying to encourage people to do harmful things to their kids. So you can't buy $100,000 for your child. And so again, the guarantee issue amount for yourself is $200,000, and you can buy up to $500,000 with questions, up to $200,000 with no questions, and then up to $50,000 for your spouse. And if you are a sworn police officer, there's an additional benefit called a line of duty benefit, where if you unfortunately pass away in the line of duty, you get an additional $50,000. So that's a nice benefit that we have for our police officers. I think it applies to fire as well, but I'm not sure. Disability insurance, also known as income protection insurance. So if you pass away, at least the expenses associated with you are gone. But if you're totally and completely disabled and you cannot work again, you've lost some income. So again, at no cost to you, and this is a very expensive benefit, Miramar offers long-term disability insurance. So depending on your employee classification, you will get 50 or 60% of your monthly income if you're totally disabled until age 65, and up to 2 years if you are disabled. And there are also other benefits associated with this long-term disability, where they provide you with return to work training, partial disability benefits, and you're covered for up to 2 years. So it's nice to know that you can get at least 50 or 60% of your income on a monthly basis to help cover expenses while you cannot work on a full-time basis. So a very expensive benefit that doesn't cost you anything. We also have an employee assistance program. So a lot of times, some of us, we have emotional problems, marriage problems, problems dealing with our kids as they struggle with school. And we've promoted this program for a long time, the Employee Assistance Program. It's offered at no cost to you. And there was a significant increase in utilization with COVID. That was great. But we should also use wellness services, mental wellness services on a proactive basis. So if you're feeling stressed, you're feeling any kind of emotional thing, you can talk to a professional that's licensed, that's trained, that's a doctor, and it's covered at no cost to you. So the numbers we've seen go down once COVID started going down, but we should really talk about mental health wellness and use it on a proactive basis. And supplemental benefits. So these are benefits like the legal plan with preferred legal. This is a great benefit. We've had preferred legal for a long time, and you can get legal services at a very minimal cost. They offer great customer service, and it covers a variety of topics, as you can see here. We also have voluntary benefits, which we've offered for a long time. So the benefits that you see listed here, they were offered before through Aflac, and then now being offered through the standard. So you might think, well, why are you making the change? Well, we had the contract with Aflac for 5 years, and per the procurement policy, we had to go out to bid for RFP. Aflac did not respond to the RFP. The standard did respond among other carriers, and they had the best pricing and the best benefits. So for the same services you got with Aflac, the benefit payout is higher with the standard, and the cost to your paycheck is lower than it was with Aflac. So we have critical illness, hospital indemnity, accident insurance, and short-term disability. We will no longer offer whole life insurance, but those of you who have it, you have the option to convert your existing whole life insurance policy to an individual policy. And you will get more information about how to enroll online, in person, or by telephone call. So standard, that's who we use for our life insurance, long-term disability insurance, and now we have them for our other supplemental or voluntary benefits products. And so these are some details about how to enroll in the voluntary products. And so you can call Benefits Education Center to sign up. There's also the QR screen, so you can take a picture of that and a web link will show up. And then you can also sign up for one-on-one meetings with that online portal. You can register, enter your information, and then you can meet or speak with someone about the new voluntary benefit offerings.
And I also just want to make a note here. It's very important. So what you're going to notice when you go into open enrollment, you're going to see that your life insurance information isn't there. So now that Standard is our carrier for both life insurance, which they've been our life insurance carrier for many years, but also our voluntary benefits carrier, they've partnered with PES to offer a web tool that'll allow you to see and increase your life insurance benefits, and it'll also give you the opportunity to enroll in the voluntary benefits. So you'll see your basic life insurance, you'll see any voluntary life insurance that you've elected, or if you haven't elected, you can make that election in this system, and it'll give you the opportunity to elect the voluntary benefit products. So if you are participating in the Aflac products, they are not going to just automatically enroll in Standard. You have to actively either call Standard through their PES partner, which the number is on the screen, or you can do it online. And we do have some dates that Standard will be coming on site to help one-on-one as well. So you have several different ways in order to talk to someone or look for yourself through the web tool. If you're pretty technology savvy and you like doing things online, we have that option available for you as well. So I encourage every one of you to look at this, especially if you have been participating in the Aflac products. As Mike said, in most of the cases, almost all of the cases, your cost is lower and your benefit has been enhanced. So it makes a whole lot of sense to take a look at this and make your selection.
And if you're on the high deductible health plan, this is also it's also great to buy one of these voluntary benefit products, because you get a cash benefit if you have an accident or a hospital stay, or there's a list of items covered under the critical illness and the accident policy. So if you had something that happened in the past, or you have children or a spouse or a partner that may have an issue, then it's another way to offset potential costs if you're on the high deductible health plan, so you don't have to use those HSA dollars.
All right. Thank you so much, Mike. I think you went through all of the benefits. Excellent, and I hope it was helpful for everyone. So now I'm going to go through a quick how-to guide to enroll in benefits using the Employee Self-Service module. And so what you're going to do is you're going to access ESS either by following the link, or you can use the QR code on the screen if you want to do it on your phone. And then you're going to log in using your employee ID and your password, okay? If you've never logged into ESS before, the first time you log in, your password will be the last 4 digits of your Social Security number, and then you'll be prompted to change that password to something else, okay? Once you log in, on the left-hand side is where you'll see the menu bar, and you're going to click on Benefits, and then you'll also have a link for Open Enrollment. That screen will then show you your current election, right? So what you're enrolled in today, and then it'll allow you have options for you to make a new election or decline that election or to keep it the same. And so you can click from these links, and if you want to make a new election, it's going to pop up a screen with all the different choices that you have available to you, showing you not only your cost per pay period, it shows the cost annually, and it shows what the employer pays on behalf of you. You should definitely take a look at that. I think sometimes we take it for granted that we have insurance and we have to pay for it, and so we kind of look at only that side of it, of the coin, but we're not considering how much it does cost 100% and the portion that the city is paying for you on your behalf. It truly is a great value. Once you've made your selections, you have to go through every single section, make your selections, and once you do that, you click Continue, and you can look at an overview of everything that you selected. And once you submit, at the bottom, you submit your choices, you actually get an email to the email address that we have on file for you, and that email will give you that confirmation of all of your selections that you've made and all the plans that you're in, as well as what your per pay period cost and annual cost is for the selections that you've made. Remember, you can access this tool and make changes as much as you want starting now through November 15th. After that, and November 15th through 11:59 p.m., I do not recommend that anyone wait that late. Do it now, but you have until November 15th, 11:59 p.m. That's almost 3 weeks to make that change. So after, there's no exceptions. On midnight, November 16th, that link is gone. You will not be able to make any changes, and no exceptions will be made to reopen that window. You have plenty of time to get this done. So let's talk about your next steps, everyone. You need to read the 2022 enrollment guide. You can find that guide. We have paper copies that the client service representatives and HR can help distribute. We have it electronically, so you don't even need to wait for that. We have it electronically available on Miramar Pulse. We also send emails all the time with this information and the links to get to it. So we recommend that you find it electronically. It's also located with a link in ESS. We encourage everyone to use the Alex Decision tool to find and learn about the best plans financially for you. Make sure you log into ESS and to enroll. Tell your coworkers, anyone who's not on this call, help us spread the word. Bentech is not to be used for open enrollment this year. You won't even be able to. You need to use ESS. Update your personal information. Take that opportunity to make sure your address is correct. New ID cards may be sent if you newly enroll in a coverage. If we've got your wrong address, it's not coming to your house. So make sure that we have your right address. Choose your benefits. Submit them on time before November 15th, and consider the high deductible health plan with the HSA health benefit. And get your questions answered by human resources. All departments have a client services rep assigned to you, which is your HR representative, and you can go to them and ask them for questions, ask them your questions. You can come to benefits. So you have many different opportunities. This presentation is being recorded. It'll be available by tomorrow. So you've got so many opportunities to learn more about what's changing, what's not, and getting the information you need in order to make the best choice for you. And so I hope everyone has been got to this meeting logged in through the virtual health fair. We actually have a meeting coming up right after this. We've got Humana, who's going to go over the vision program so that you know what to expect with Humana. We've got Standard, who's going to be talking about the Voluntary Benefits program during this health fair. So there's going to be a lot of information. We encourage you to attend the health fair, listen to the presentations, go to the presentations offered. There will be prizes. There will be actually a scavenger hunt, and so there'll be gift cards awarded, raffles, all types of things. So you know what? It makes sense. Join, and you will get vitality points for participating in the health fair. And all of the vendors, all of our benefit vendors are there in the platform live, ready at their booth, ready to answer your questions. So Aetna is there for your specific questions, Delta Dental, Humana, they are there and ready to answer your questions and help you so that you can make the best choices for you and your family. Also, here is some information which we've emailed out, and it's also available on Miramar Pulse of our upcoming virtual sessions. So we've got some more sessions coming up this week and the week of November 9th. And then we've also got some in-person sessions happening on November 3rd and 4th. The November 3rd meeting is specifically for Public Works and Utilities, but it's also available to city staff that's unable to attend a virtual session. If you are able to attend a virtual session, just to limit how many people we have in one room, I recommend that you access the virtual session. Public Works and Utilities, because they are mostly working out in the field, we have an in-person session for them. And then Parks and Recs as well on November 4th. And again, for other city staff unable to attend a virtual session, you are welcome to join. Those will be held in commission chambers, and we'll also work through the client services reps to get this information out to all departments as well. And so I did see a bunch of questions in the chat, so I'm going to go ahead and go through those questions really quick. And you can see I'm kind of going a little bit fast because I do need to get us ended, and so you can get to the next presentation and learn more about Humana and standard insurance. All right, so let's go through these questions, Mike. Okay, let's see. What's the first one I've got? I've got, if the deductible is $1,400 for a single person, why, after I use the $1,400 that is given to me by the city, do I still have to pay an additional $1,400? So I think that question has to do with the out-of-pocket max, right, after the deductible. Mike, if you can go ahead and go into why there's still costs on the table there.
Sure, and if you can go back to that slide. So there's always a cost share when there's insurance, right? So if you're on the HMO plan or the POS plan, whether you're going to see going to an outpatient service or an inpatient service or get admitted to the hospital, there is a cost share, whether it's a $250 copayment or a $500 admission on the POS plan. So there's always a cost share. So what we're trying to do at Miramar is minimize your cost share. And so we're going to pay for the first $1,400, and then we're limiting your out-of-pocket maximum to $1,400. And so if you look at the POS plan or the HMO plan, the out-of-pocket maximum is $3,850. And so when people in those plans are going for multiple services, getting admitted to the hospital multiple times, they're going to continue to keep paying until they hit that $3,850, whereas you're locked at $2,800. And you're really locked at $1,400 because Miramar is providing you with the first $1,400. So your real out-of-pocket maximum is $1,400 compared to $3,850 for the other two plans.
Yep, and sometimes I think people get confused thinking that I have to pay another $1,400. No.
Correct.
Once you've met your deductible, you're now responsible for 10% of that cost. So let's say the doctor charges $100 for the visit. You've met your deductible.
Or $1,000. 10% of 1,000 is 100.
Right. And so like a normal doctor visit, I see costs ranging between $60 to even $100, up to $200. And so if you're only responsible for 10% of that, think about it. For a doctor whose negotiated rate with Etna is $100, 10% of that is $10. It's actually less than the $20 copay that people are paying on the HMO. And so, yes, you do have a cost share, just like that there's a cost share with all of the other plans, but it's only as you're using the plan. Now, if you're using the plan in a way where you're using it so frequently that you've met your deductible and you've got costs associated with coinsurance, there's that stop at the $2,800 that says, okay, you've spent that, which is all the deductible costs, any coinsurance, any copay, all goes to your out-of-pocket max. And then once you reach that out-of-pocket max, $2,800 on an individual, $5,600 on a family, the plan pays 100% for the rest of the plan year. Okay, but most people are not utilizing that plan so frequently to actually hit the out-of-pocket max. It's actually quite rare.
Right. And if you look at the example that Naima showed earlier, where an MRI costs $382, if she spent her first $1,400, um, then everything else is subject to 10%. So she would pay 10% of that 382, which would be $38.20.
Yep. Yes,
And so
absolutely.
all those small amounts of 10% will continue to add up until she hit $2,800. The remaining $1,400, because it's 2,800 minus the $1,400 deductible, and it will be hard to meet that because 10% is such a small number.
Yep, absolutely. All right, the next question we have is, can family members use the clinic? And yes, family members can use the clinic if they are enrolled on the plan. So if they are your covered dependents on the city's plan, and it has to be one of the city's plans, which is through Aetna, so the HMO, the POS, or the high deductible health plan. We also have an additional high deductible health plan for retirees that's only accessible to them. And they, as well, as long as your dependents are covered on one of those plans, they can access the clinic. Okay. We have another question. Since the cost has gone up for health care, should we expect the prices to go up in the future? Is the city going to always absorb the cost? I can't tell the future. What we're doing now is we're putting things in place to mitigate those cost increases. And when they're minimal enough and the city's able to, I've seen historically that the city has tried its best to keep costs low for employees. But I can't speak for the future. I just know over the last few years, this is what has occurred. So the things we've put into place to try to keep that going or mitigate those cost increases is the use of the healthcare clinic. So we put the healthcare clinic in place as a long-term strategy. As employees are utilizing the healthcare clinic, those are lower costs not only for you, but also for the city. As you're using healthcare wisely, you're looking up costs, you're trying to find the best cost option for services, and the high quality options for services that also lowers the cost on the plan. And so as we work together and continue to do things that help the plan, then that also mitigates costs and mitigates what employees will see in the future.
And that's a great
Okay.
question. And one of the things that's frustrating for myself, Naima, and the leadership at Miramar, if you look at the screen in front of you, it says routine physical and immunizations covered 100%, no cost to you. So you would think that everyone would go and get an annual physical in their blood work, and they don't. And so you have a lot of people who are walking around with conditions, and they don't know they have these conditions, and it's getting worse over time. When if every single person got their annual screening and blood work, you would know exactly what's wrong with you, and you can avoid potential illnesses, which would cost the city a lot more money later on. So I think total we're spending 16 or 17 million dollars a year on insurance, and the cost share, I think Miramar, the city, might be paying 16 million. I don't have the numbers in front of me, but combined members are probably paying $1 million. But we absorb a great deal of the cost, a lot more than other cities, and we're putting everything in place, including a clinic, including Vitality, where you get paid if you just do what you're supposed to do and get your annual physical, and still people are not doing it. And so we're doing all we can, putting all the tools together. We've got cheaper vision insurance and standard insurance. So we're trying to manage costs, but we need employees to do their part to help manage costs and avoid getting sick in the future by finding out what could be wrong now. And if you're healthy, to keep doing what you need to do. But you don't know how healthy or sick you are unless you get your annual physical, which includes the blood work, which is why we have an on-site clinic to make it even more convenient for you, even though it's going to cost you nothing, regardless of the plan that you're on.
Absolutely. And, I want to also bring up, you brought up the preventive health care. And so I just want to remind those of you who are game union members that it is written into your contracts, into your collective bargaining agreement, that you are required to get a annual physical each year. You're going to experience a $15 increase in your premium over the next plan year. So those of you who did what you're supposed to do, you got whether you went to the clinic, whether you visited one of the personal health assessment events that we held throughout the city, at Public Works, at City Hall, or you went right to the clinic and did it yourself, all of you won't experience that increase if you're part of the game union. But if you did not do that and you did not do it by, or you did not do it by the July 31st, 2021 deadline, you will experience a $15 increase in premium. We've sent notifications to that and reminders of that. And again, it's in your bargaining agreement. It has been in there since 2019. So, and it is in your bargaining agreement, the new bargaining agreement that went into force on October 1st as well. So make sure that you're doing that and you're getting your preventive screening. And we make it super easy for you with the on-site healthcare clinic because it is completely free and you get to do that on company time. And Dr. Sales is phenomenal. She's also doing a presentation during the health fair, and I encourage everyone to attend as well. All right, so I got a couple more questions. Does the $1,400 funded by the city for the HDHP roll over each year if not used? Yes, it does. The health savings account is not like the flexible spending account. The health savings account, the money that goes in is yours. It's always yours. It rolls over year over year. You own the account. The city does not own the account. Okay. Someone asked, what is the difference in the FSA healthcare and the FSA limited purpose? Can they both be used for dental and vision? The FSA healthcare and the FSA limited purpose are different because the FSA limited purpose is just for those people who are enrolled in a high deductible health plan. The IRS rules say that you cannot be in an FSA health account. You can't have like first dollar coverage readily available in a FSA. You can have a health savings account as long as the high deductible health plan meets the requirements to have a health savings account, which ours does. And so that's why the limited purpose is only available for dental and vision. So you can only use it for dental and vision. The FSA healthcare is for dental, vision, medical. It's for all healthcare expenses that are approved by the IRS. There's a list out on MiramarFL if you want to look through that. And those people enrolled in the FSA healthcare would not be enrolled in a high deductible health plan. They'd either be enrolled in an HMO or the POS plan, and that is the difference between the two. All right. Who is eligible for the HSA? Those people that are enrolled in the high deductible health plan. So if you're enrolled in the high deductible health plan as an active employee, you will receive a health savings account automatically, and the city puts in their contribution in January automatically, whether you participate in putting in your own contributions or not. I have a question about the recording access. This is being recorded, and the link and the presentation will be available by tomorrow. So tomorrow is October 27th. And someone asked to clarify that we are no longer using Aflac. That is correct. As Mike said earlier in the presentation, Aflac, we had a RFP process. Aflac did not participate in that RFP process. Those who did participate, Standard was ranked the highest proposer. And so their contract was approved by commission a couple weeks ago. And so the city will no longer be processing payroll deductions for Aflac products. You will get a letter in the mail to tell you how you can port those products. If you decide you still want to keep your Aflac products, you can. You just need to go on direct bill. But for those of you who do elect to participate in the Standard products, those will be processed via payroll deduction. And we went over earlier in the presentation all of the ways that you can look into the new benefit plans and make your selection for voluntary benefits. Okay. And someone asked, since city will no longer have Aflac, will the deduction stop after 2021? And if we want to continue with Aflac, what is the plan? And I think I answered that question. So the deductions will stop in December.
And they have the option to continue with Aflac and pay direct.
Yep. All right. Question about the difference between co-insurance and deductible. So, Mike, you want to take that one?
Sure. So the co-insurance is the amount that is the percentage that you are going to pay or the insurance company is going to pay. And the deductible is the first dollar amount that you are subject to pay first. So, for example, on the HMO plan, there's no deductible. So everything is covered at 100% unless it specifically says there's a co-payment. So on the screen right now, it shows For a primary care visit or a specialist visit, there's a flat copay amount. For the other services, everything is covered at 100%. For the POS plan, there's a deductible of $500 and $1,400 for the HDHP. So that must be paid first, just like your car insurance. If you have a deductible, that must be paid first before anything is paid for by the insurance company. Can you go to the next slide, Naima? Oh, before you go, so go back. I'm sorry, my fault. So in that last line, you see co-insurance. It says the amount you pay 0%, and the amount the insurance company pays 20%. That's for the out-of-network benefit for the POS plan. And then for the HGHP, it says you pay 10%. That's after you meet or spend the money down on your deductible. So now to the next slide. So here you can see with the HMO, you're paying a flat dollar amount for different services. So the other employee asked earlier about why do I have to pay $1,400? There's always a cost share for different services between the insurance company and the member. For the Aetna POS plan, there's a cost share for the hospital admission. You pay a $500 deductible and then a $250 fee before everything is covered 100%. With the HDHP plan, you pay 10% after you meet your deductible. So if, for example, you went to the hospital and the hospital stay only costs $500, you're not going to pay 10% because you have not fully spent down your deductible. You're only going to spend $500. Your remaining deductible is going to be $900. Once you spend that full $1,400, let's say the next hospital visit was $900, now you've spent down your deductible. Now all the other services are going to be 10%. So if I go to the emergency room, it's $1,000 bill or $2,000 bill, 10% of that is $200. I only pay $200. So you keep paying that 10% until you hit that other $1,400, which is your out-of-pocket maximum. After that, everything is covered at 100%.
Yep.
And so the co-insurance is the percentage split between the employee and the insurance company, and the deductible is the first dollar amount that you pay before the insurance company pays out.
Yep. Think about your car insurance. It's kind of the same way. If you get into an accident with your car insurance, there's a deductible on it. And once you pay the deductible, then that's when the coverage kind of like kicks in and starts paying based on the plan benefit of how your whatever copays are associated with your car insurance. So it's the same type of concept.
Mm-hmm.
All right, the next question was, do I need to submit receipts to Aetna to show I have met my deductible? And the answer to that is no. So every time you go to the doctor, you present your ID card. They look you up in the system and they determine, oh, you have a deductible, or they determine what your plan benefits are. Then they file a claim to Aetna. Even if you have a deductible, they're going to still file a claim to Aetna. That is there as long as you're going in network. And I always encourage everyone to make sure that you're always staying within the network. You're going to get the most bang for your buck by going in network. The HMO plan and the high deductible health plan is in network only anyway. So if you're out of network, you're paying 100% of those costs. The POS plan does have out-of-network availability, but the costs are so much more higher. So, and the network is so expansive that it's really, there's no reason to really go out of network. We look at the reports and probably like 1% of people go out of network each year. So you have a great network available to you. But what happens is, based on the contract with the doctor and Aetna, they know that they need to submit and file the claims that are associated with the services. And when they file that, then Aetna then sees, oh, you had this service, this applies to your deductible, and they apply it there, and they start reducing what's left on your deductible from there. So you don't need to submit anything to Aetna yourself. The doctor submits those claims on your behalf. All right, and then we have a question about the vision benefit, about the $110 or $200 benefit. It says for frames, does that include the prescription lenses? Do you have the answer to that question, Mike?
Yes, it does include prescription lenses.
All right. So when does the new plan begin? And the new plan year begins on January 1st, 2022. Until then, yes, you are still on the current plan. And so as long as, your elections that you're making, you make them now through November 15th, that's it, but they're not effective until January 1st of 2022. Okay, so if you remove anyone from the plan during open enrollment, it's not effective until January 1st, 2022. Okay?
And
Now,
they can join the Miramar plan if they have an IRS qualified event, marriage, divorce, loss of a job, gaining of a job where there's insurance. So there's a question there about special circumstance to join the company's medical plan. If they take on another job and they have medical insurance there, they can drop from your plan and join their plan, and vice versa. If you lose your job in Miramar, you can join your spouse or partner's plan.
yep, yep. So life events, are always available if you meet the requirements of the life event. So your spouse obtained other insurance, and so you want to drop them from the plan based on the effective date of that insurance. Just make sure you need to be prospective, like it's a prospective change, right? So the only changes that are happening retroactively are a birth of a child. Everything else is handled on a prospective basis. So as soon as you know that's going to happen, as soon as you know that there's going to be a loss of coverage, as soon as you know there's going to be a gain in coverage, you need to notify Human Resources, because there is a 30-day time limit for you to notify us and provide the proof and apply for the life event change. So it's always a good idea to follow up on those things like right away. But open enrollment, any changes you make for open enrollment is effective January 1st, 2022. Okay?
So Naima, for someone that has a spouse that's joining a job, what kind of documentation do you need? Do you need the job offer letter? What documentation do you need if someone wants to leave the Miramar plan and join a spouse's plan?
Yep, great question. So sometimes either their human resources department at the new employer will provide a letter, or when the person makes the election for open enrollment, or their new hire elections, usually get a confirmation statement. The confirmation statement should show who's making the election, the coverage that they're electing in, the effective date of that coverage. So a confirmation statement of the enrollment, it works as well, as long as it has those details on it. Or it could be even a printout from the insurance company. All insurance companies have a website where you can log in and see your coverage, and it'll show you who's covered and the effective date of that coverage. So that documentation is also just fine for us. Basically, what we're looking for is the date of the coverage goes into effect, who's covered, and what the coverage is. Is it medical, dental, vision? And then that helps us connect the life event with the action that you're trying to take. So when someone's gaining other coverage, you should be showing us the coverage that's being gained, who's gaining it, and the date they're gaining it. If they're losing coverage, you should be showing us documentation that supports that there has been a loss, who's losing it, what are they losing it, and when are they losing, okay? So it just has to be consistent, and you do have to take that action within 30 days of the effective date of that change. All right, we got through all the questions. We had a really good, awesome group today. We had, I'm close to, I want to say, 90 participants, all in all. So I just thank everyone for joining. I really hope that this was helpful for you. Remember that we do have other sessions going on, and this will be recorded. So if you feel like you want to join again, maybe you missed something, or you want to listen to the recording, feel free to do so. You have until November 15th, everyone, and that is it, okay? I'm cutting off my phone and going on Do Not Disturb on November 16th. If you didn't do your elections, shame on you, because you've got plenty of time to do it, okay? So I wish everyone well. I hope everyone has a safe and wonderful day, and I thank you all for joining. Thank you, Mike, for your wonderful expertise, and we appreciate you very much. Thank you.
Thank you. Thanks. Have a good day.
Bye, everyone.